Okay. Jump on and get this out on Twitter. And let's see see what kind of crowd we get today in here. Hey, Shredder, welcome to the live stream. I had a question. Well, this is definitely the place to ask your question, Shredder. That is what we do here. Let's see, let me look here. Did it actually? Just checking to make sure it went out. And yep, okay, the tweet did go out. Paul, morning, man. Looks like Shredder jumped in here ahead of you. All right, now that I've had a little sip. Yeah, when I brought everything... Oh, you're driving right now, Paul? Yeah, it's funny because people were asking... Feisty was asking where I was, and it's like I was driving at the time. So driving is a very important part of people who... You know, for your job, plowing, you're always driving. For me doing my job, you know, I'm always in a vehicle. So it's kind of funny that both of us driving at different times. Just checking the updates real fast. Riptide, welcome to the live stream, man. So, Shredder, you had a question. I'm assuming you're typing your question out right now. Okay, I gotta remember, this screen goes in the front, not... last night I ended up... well, Paul and Shredder, y'all were both in the chat. I actually moved my screens around, moved my tabs, my windows and everything. So I'm getting used to my camera no longer being able to see my camera on the right side, right by the chat. I got it moved over to the left side now. So it's taken a little bit of getting used to, but I like having my chart right in front. And depending upon where I'm looking on the chart, it is not too far off from looking directly at the camera. So all that works out really, it's working out really good now. Josh, welcome back. Welcome back to me, welcome back to you, welcome back everyone. Especially Carter. Or is it Cotter? Welcome back, Cotter was the show. Yeah, look at that red candle. What? That is... I heard Clay talking about that. I did not get a chance to see it. You know, I kind of glanced over, but I didn't really, you know, look and study and see what all was going on. So in Claybro's live stream, he put out a poll. Oh, here we go. I waited for a long time to get a call option on POW, Strike POW. Okay, let's go ahead. We'll pull the ticker up first. It looks like this question is really well thought out. Okay, ammo. Okay. I waited for a long time to get a call option for POW. Strike price $5 January 2. Okay, so you're a year out on it, so that's good. The fact that you're buying a call and you're saying it's a year out, that is already a good sign. You're giving yourself time to be right. That is one of the important things when it comes to playing options, is having enough time. So you went with January of... Did Weeble change some stuff up? Okay, January 20th. Break even of, wait for it to load. We want the call side of the house, single options. Let me go and close out the 9-day here. It finally filled after Clay's show. It would have been $1.15 per share. But I canceled it and tried again. It went up. Now, did you get your fill? That if you got your fill, uh, you can you can sit there and set you know send out a contract and it cannot get filled, not get filled, not get filled. But if you actually got filled and closed out, so did you end up taking a bit of a loss there? It would have been $1.15 per share. So you look at the $5. So right now that is at $1.18 per share. So essentially, if you got filled at $1.15, that's $1.18. Currently, you are $3 up. Canceled it and tried again. It went up 5 cents one contract. I'm trying. I waited for a long time to get a call option on POW. Strike price, yada yada. Break even is $6.25. Finally got filled after Clay's show. It would have been $1.15 per share, but I canceled it and tried again. Went up 5 cents one contract. I got my fill and it's printing. So what did you actually get filled at, as far as, because essentially your call option here, this is at any time, because you are the buyer, you have the right but not the obligation. At any point you can say, okay, I want those shares right now at that price. I wouldn't right now, because you can go out on the open market and buy them for cheaper. So the value that you're looking at, Shredda, is you've got a lot of time left on this. Looking over at your theta, you're losing essentially 20 cents a day. That you've got 10 months left on this. So theta's working to your side. You have a lot of time for this to be right. So if the price goes up, depending upon how far it goes, it'll start increasing proportionally to the delta, and the delta will have the gamma added onto it, and that's where your value goes before the expiration date. Now, as you get close to expiration, theta is going to kick in. This will begin to lose value. But as the stock, if you plan on holding this for a year, or for another 10 months, hopefully it gets up over. And as you stated, you have a break even, and your break even essentially is your strike price plus what you paid for your premium. So looking at it right now, if I purchased a $5 call option, I'd be paying, if I got it at $1.18, that being the middle point right there. And I usually try to always go for the middle, because if you're going for the middle, you're not fighting the bid and the ask. The bid and the ask are people on extremes who think who want more or want to pay less. So looking at it, I always try to go for the middle. I don't fight over prices unless I'm not going to be watching the stock, and I go ahead and set it. That way I can go do whatever I'm doing, and if it gets filled, it gets filled. If it doesn't, it doesn't, which we're going to talk about here in a few minutes. But essentially, if I entered in a call option and I got my fill, my break-even price would be $6.18, because you just add the two together. So yeah, if it ran up like really, really fast, if it gained $1, and if it looked like it was going to pull back, yeah, I would look to get out. Even 50 cents, if you got filled at, if you filled at $1.15 or whatever you filled at, any amount that you gain, is going to be direct profit. Okay, so you got the fill at $1.20, break even $1.25 when it finally got filled. Would have only been for $1.15 because they started over. It was patient. It's printing now unlimited. Well, what do you're saying the stock is, if it's printing, I would assume it'd be running, but at least on the day, it doesn't look like there's too much going on. POW ammo. I think I heard a little bit about this in the stream. Won't be in here today. She embarrassed me in Clay's stream. It's all business and no... Wait a minute, all business, no disruptions in here? Well, I hope that all business, no interruptions is a sign or a praise of a good channel. But yeah, if this starts to pick up and run a bit, could definitely that early morning rise. Yeah, that was if you had you got in back here or even yesterday, that was a good run. Let's pull back. I want to kind of get a longer view. I'm not familiar with the stock, so I kind of want to look further out and see what all is going on with it. It's all good. Sorry to confuse you. But potential is unlimited. Yeah, definitely. Now here's the thing. I talk a lot about, a majority of what I do is selling. I prefer to be on the selling side of the house, mainly because on any day in the stock market, three things can happen to your stock. It can go up, it can go down, or it can trade sideways. If you are the seller, 2 out of 3 are good for you. But on the flip side, if you are buying calls, your upside potential is always unlimited. That is the benefit to playing calls. But they're also, if you hold them too long, the value disappears and it turns into an all or nothing at that point. Oh, okay. I see where you're going, Pika. So what are we looking at here? Let's check on the daily. So yeah, they've had a little bit of a pullback there. Right here, this is your, this is the week before Thanksgiving. This was the full market pullback we're looking at right now. Spiked up, certainly in the next year, if it recaptures this 625, 630 range, if it recaptures this range right here, back over... Yeah, you'd be $1.50. You'd be looking at potentially 90 to $100 profit if it moved back up to that level it was at before, when it had the little bit of a run up, and then the whole market just got obliterated. So if it returns to this level, or if it recaptures this level and continues on the upward trend in the next couple months, you'll definitely be sitting real good on these. Oh, I clicked the wrong thing. Yeah, everybody in this is the most important thing in the world. Everybody listen to Outdoor Smile, and Outdoor Smile, welcome to the live stream. Smash the like button. You polished me to get good at options. Thank you. Hey, sure. This channel is for the community. This is a channel where if you have questions about options, that is, Clay stated it on his stream. If you want to learn options, or if you know options and want to learn more about them, because a lot of people that they straight up play calls, and there's don't get me wrong, there's absolutely nothing wrong with straight up playing calls. If that is your trading style, if that is the options you like, there's absolutely nothing with just playing calls or just playing puts. But anyone who wants to learn more and learn new ways of doing things, not only do I have my own trading strategies, my own trading style, I'm constantly evolving it. And if anyone happened to look at the title of the video, there are 3 words capitalized, total caps on them in there. If you were in the live stream last night, you know that I am looking to set up a wheel route, or not a wheel route, but a wheel rotation on Ford. Well, the wheel involves the selling of covered calls and the selling of cash secured puts. So yeah, it's called putting diamond wheels on a Ford, because Ford is the stock that I'm looking for to run this wheel strategy off of. Shredder thanks. Wasn't until the end because I had dentist appointment, so wasn't sure. I don't see Outdoor Smile. Ford's not a moon stock. Ford is part of my long-term investment portfolio. It is actually the first stock I ever purchased. But the reason why I was mentioned that earlier is because, wow, what a gap up. So what I'm doing right now is this morning I successfully got a fill, and if you remember in Clay Rose, he did the poll on where we see AMC ending the week on Friday, and I put 1801. Ford is better than Tesla. You can hear that engine. Yep, definitely Shredder. So I commented that I have the price prediction for Friday that we are going to close out AMC at 1701. That is because I did get my fill, and not only did I get my fill, I got the fill at the premium that I was looking for. And I got those contracts for the $17 strike price. Now I've got some that I'm looking to capture profit on, and I'm looking to exit those, capture profit, but I will leave one option open, one contract open, and kind of, it's heartbreaking to say it, but I'm going to leave the one contract open to potentially sell 100 shares of AMC at $17, which will easily get me 100 shares of Ford. And using the 100 shares of Ford, I'm going to use that as a feeder for the sole purpose of generating additional revenue, additional capital for the purchasing of more AMC shares. Because right now, like I stated last night, and for those who weren't in here, I'm not saying go out and sell your AMC. I'm not saying AMC is done. I am taking a small portion of my AMC position, and I am turning it into the Ford engine that will generate more shares. Because the thing behind a wheel is, I'm going to pop in here. I'll pop into the option chain 2 days out. So we're on the call house. So what happens is I have 100 shares of Ford, and I want to go and I'm going to sell a covered call for the $17 strike price. And I'll collect $16 premium. Well, $16 premium right now is almost a full share of AMC. And I will let this run through till Friday to expiration. Now, this is either going to expire worthless and I get my 100 shares of Ford back and I do the same thing next week, or my covered call gets executed on and I receive $1,700 because I'm selling my 17 shares, or I'm selling my 100 shares at $17. So if that happens, the following week, I will turn around and sell a cash secured put. Currently it's at $17 now because it ran up and executed. So the next Monday, I would open a cash secured put, putting up $1,650 as collateral and receiving whatever premium. But right now, right now it says 36, but it would actually be, the premium would be reflected. Would be reflected on the put side of the house. So we'd be looking about $20 to $30 premium that I would receive. I would immediately take that premium and run out, and looking at the price of AMC right now, $16. This would be another 2 shares of AMC that I could purchase on the cash secured put, plus the $50 that I collected, the $50 differential, because I collected $1,700 when I went to go enter my cash secured put. When I went to go sell it, I only had to pay $1,650. That extra $50 can immediately get put over into AMC. So this wheel, all I do is I keep running this rotation, and I can push it out 17 to 16 and make it $100 turnover. But $50 turnover, it gives me a better chance of getting executed more regularly. So essentially, I'd be looking to, if it flipped every week, I'd be looking at having an additional $70 to $80 to either buy more Ford to set up a second wheel, or put directly into AMC to buy more shares. The having a covered call to intentionally get executed on for AMC, if they drag it out long enough, I will end up ahead. And the whole thing with the AMC is, when I do covered calls on AMC, I set stop losses, because if the AMC starts ripping to the moon, those stop losses are going to prevent me from losing my shares. But if it runs up and triggers my stop loss, it exits my position, I pay out a portion. Usually I'm looking at about 20 to 25% risk. That's what I'm willing to risk. So if I end up receiving $100 premium for my covered calls on AMC, I would have a stop loss set at 120, 125, 130. Depending upon what my risk was at present and how far I thought it could run. So if my stop loss gets executed, my shares come back to me, but I'm out the money for the stop loss. So by having a sacrificial stock like Ford, to where I can sit there, I don't have to worry about getting executed on. I don't have to have a stop loss because I'm accepting the fact. I want, by doing the wheel on Ford, I want it every week to get triggered. I want 1 week to have my covered call get sold and to lose my 100 shares, and the following week my cash secured put to trigger and to buy those shares back for cheaper. That is the whole purpose behind it. So this is another way of just generating additional money, generating additional shares. A lot of people are like, oh, he's talking about selling AMC. I'm not selling AMC to sell AMC. I'm selling AMC to create a revenue generator to get me more AMC. I'm selling a small portion to get a whole lot more in the end. And it's kind of it's a little aggressive, and some people are like, oh yeah, he's not a true ape. He's not diamond handing. My MOAS shares, those aren't leaving for nothing. Those are, I'm waiting for the hedge funds to cover, and I'm going to take them for every cent I can. But I realize at this point, because of how gun shy I get about some of the stop losses, last week was a perfect example. My stop loss would have been triggered. I actually exited my cover calls early. Took a step back from them, got out of them early. I ended up making a couple $100 that week because I re-entered later on when it stabilized a bit. But yeah, for that individual trade, I lost money on it. It'll be nice to have Ford doing the same job as AMC, and if you look, their prices aren't that different. 1650 to 16, they're not that far apart. I could go out right now and just say I'm going to sell $100 or 100 shares of AMC right now and immediately purchase $100 of Ford. But the thing is, why not? I will do that on Monday if I don't get executed on, and if I do get a good run up in price. AMC hits 1650, 1675. Well, if you add in the premium that I collected, I wouldn't be losing as much. Now there is let me check the. Yeah, but Pika, definitely for hanging out here and learning option stuff. I'll teach you any level of options you want to learn, and take it step at a time. Did the same, Frank. Sold some AMC in one account to fund options, which has been funding more AMC. Yeah, and looking at it, Riptide, Ford is looking, it's at a decent price. It's giving really good premiums both on the high side and the low side for running the wheel. And that's the reason the wheel was built. It's just for, generating that little bit every week. Outdoor, love hearing that truck. Auto drive on a Tesla. Yeah, I wouldn't like the auto drive on a Tesla because I guarantee you it's not as good of a driver as I am. Bought a bit more AMC last week. Now, okay, so this is the heartbreaking part right here, and it only changes if the MOAS happens in the next month. Whether it be through a covered call executing or next week if I get a price and look to do a direct sell to buy the shares of Ford, I will not be purchasing shares of AMC for, I'm going to call it 32 days after the sell of those shares. Because those shares, I will be selling them at a loss. And by selling them at a loss, if I buy back in within 30 days, it'll be the wash rule, and I will not be able to claim that loss on my taxes. So, if the MOAS happens, I don't care about taxes. Who would really care? At that point, I'd have enough to where I'm not going to care about the write-off on 100 shares of AMC. Wash rule be damned at that point, because the hedge funds are going to be paying me tons of money at that point. But if it doesn't, then during that next month, 30 trading days, I'm calling it 31, 32. I'll when I make the sale, I'll figure out what day I can go back to buying AMC. But for that time period, all I'll be doing is building up a whole bunch of capital to have it on standby to buy shares. As soon as I'm able to buy again and not get hit by the wash rule, I'm immediately, every bit of dry powder I have is going back to buy more shares of AMC. That is the only bad part about what I'm doing, is because I will be selling at a loss. I will be looking for the tax write-off on those, so I will not be able to. I'll be storing up dry powder for a month out to purchase. I like Ford at 16, but I really want it at 12 to buy a boatload. Long on Ford. Yeah, my average. So it's actually gonna. My average at Ford when I start doing the wheel is going to be irrelevant, because so right now on Ford my average is 1251. The problem is when I start doing the wheel, I'll be buying and selling in in the 17 to 15 range based on where it's been going right now. So essentially, after all that kicks in, my average is going to be around 17 to 15. I'm on by Ford. I'm on a 10-year plan. 10-year plan for retirement? Outdoor Smile, or what is it? What is this 10-year plan you speak of? And also, part of the whole 8 movement is we don't want people telling us what to do with our money. Well, this is my money. This is my trading style. This is my brokerage. I work the hours. I buy the shares. I develop the strategy. I'm paying the taxes on it. So if people, are upset that I'm talking about selling 100 shares and that's all I plan on selling, if people get upset about that, this channel is dedicated to the people who understand or want to understand options and they want to make money off of. If you cannot see the potential, especially the upside potential of the move that I'm making, you don't need to be on this channel. You need to go find someone, in the words of Matt Core, that'll fill your confirmation bias. Because I am doing everything I can to get as many shares of AMC as possible, so that when the MOAS happens and life-changing money hits in, the amount I need for life-changing money keeps coming down, and everything over that amount is just that is a land somewhere by a lake or a creek up in the mountains somewhere with nice year-round weather, snow in the winters but not 30, 40 below zero, not 1 billion degrees in the summer with 100% humidity. This is everything I'm doing is so that the people, myself and the people I care about can have the best lives possible. So I will do everything I can to improve that, improve my position to make that happen. So yeah, that's I'm looking to sell 100 shares of AMC, and I'm doing it for my family. I'm doing it for your family, because when all this kicks in, the more shares I can hold, then that's the less shares that hedge funds can borrow. That's the less shares that can be used against us. So yeah, they may, my 100 shares is not gonna, prevent the MOAS. But the 100 shares, 200 shares, depending on how long this goes for, the more shares that I collect will help us in the long run. Yes, retirement. Okay, investment LLC. That is awesome, Outdoor Smile. That is good to see. Buy Ford now, hold for 10 years using a drip, be sitting pretty in my opinion. Yeah, that's the thing, Riptide. I'm running drip also. So as I'm running this wheel, if I time it out right and make sure I'm not actively in any contracts on it when for the ex-dividend date, because I don't have to do open Monday, sit to Friday, open Monday, sit to Friday. I don't have to do that. If I know I'm coming up into dividend week, If I know I'm in that week, I can go through and say, okay, I'm going to wait till after the ex dividend date, because after ex dividend date is when it gets decided that you are getting the dividends for those. So all I got to do is, if ex dividends on a Tuesday, that means, I know it's coming up that week. I just don't enter them on Monday, and I sit back and wait. And when Wednesday comes and ex dividends already gone through, and I get the notification I am receiving yada yada dividend for owning however many shares of Ford. As soon as I get that notification, I can go out and start my wheel again. So yeah, the drip, and Ford's dividend isn't, it's not spectacular right now. But think back not too long ago, they suspended their dividend. So the fact that they reopened their dividend tells you as a company how they're doing. Frank, I did the same thing. I was fortunate to make a boatload in the beginning. Still have plenty AMC. Yeah, that's facts. The Clayborough Trailer Park. I'm there. Yep. Upgrading Clayborough Island. Hey, Assidious, welcome to the live stream, man. What's up with Kenny's mood swings on GameStop today? Let's have a look at GameStop. We can go and we can jump over there. Let's see, GameStop. There we go. GameStop looking gorgeous today. Nice little run up. GameStop needs to get back up. Needs to establish itself. Both AMC and GameStop do. This is a good action on the day. That is a nice steady run right there. That is a definite upward channel. So what are the references to the mood swings that you're talking about, Assidious? Feisty, welcome to the live stream. Your diamond handing AMC, just joking. It is totally up to you. How you want to play it. If you want to. I'm not going to go out and say don't day trade AMC, don't swing trade AMC. I'm not going to tell anyone how they should trade. I'm going to provide information where if people want to, if they want to take the information I give and use it that way, that's totally on them. I'm never going to tell anyone what they should or shouldn't do with their money. Heard they're trying to unload Epstein. Oh, I almost said that name too. But yeah, so and I will divulge on AMC. Yeah, GameStop's looking great though today. That's that's definitely good news. Just like AMC a little bit more choppier, but it's still been on upward all day. God, that's 1626. I might get executed on this Friday. I'm hoping for that 1701. I am hoping that I get executed on Friday. That if it hits at 1701, that would be almost perfect. Okay, so we're on AMC, going over to options. This is this week. So I got we're on the put side. We want calls. So yeah, I got filled the 17s for this Friday at $29. That was a premium I collected. Essentially, a share and a half, almost 2 shares of Ford. That I'll be looking to purchase in, and anything that's left over. So as I keep adding more and more to my Ford position, and if I get filled at this 17 and get that 1700, whatever is left over, I'm gonna wait for AMC to come back down, and I'm gonna be waiting for the dip. I hope I get a dip, but it's that wash rule that's gonna get me, because after I get executed on, it's going to run down. It's going to hang out at $14, $13. It's going to hang out in this range and just tempt me for the entire month. And on day 29 out of 30 for the wash rule, it's going to jump up to $18. You know how the stock market does it to you. The stock market is out to. It seems like when you're looking for specific prices, the stock market will intentionally mess with you. Outdoor smile. What's hodl mean? Oh yeah, cities. I saw that in there. But yeah, real quick, yeah. So those are my covered calls. $17 this Friday. I collected $29 premium. Okay, let's go back over to GameStop. Let's look a little bit further out. We'll jump on the 30-minute. Oh wow. Sub 100 to RC buying Bed Bath and Beyond at 9% stake as, yep, maybe Cash Kenny's and dwindling. That's pretty money. Guess what country the next bot in here is going to be from? Yeah, we've had some pop in already. Riptide, we have had some of the bots pop in here. So I was actually, so as you can see from before, and you can see exactly what points I was using when I put down this this hard support line. I was actually looking for somewhere in here. I think we were actually, it might have been at the top of this hump. I was wondering if the top of this hump was going to come down and tag, right about that 86.37, 86.50, somewhere in that range. I was looking for it to pull back tag. And at the time, I was looking to maybe pick up some more shares of GameStop. The problem with GameStop is the price of the shares and the amount, you need 100 shares to play options, to sell on the covered call. And so we're looking at almost $10,900, almost $11,000 to get 100 shares to run one rotation, to run one option. So looking at it right now, you've got good premiums. The thing is, you are putting up $100 collateral per contract. But yeah, you're getting good premiums. But the fact is, you need so much capital to start it. So you're looking at $11,000 roughly to enter in on GameStop, and on AMC you're looking at $1,600. So it's just the huge world of difference between the prices, and that is a part of why, because I heard about both stocks at the same time, GameStop, AMC, and I looked at it, and at this point when I got into it, I already knew what I was looking at as far as options went. So I'm like, well, AMC at when I first got in, it was I think $42 or $43. I'm like, for under $5,000, I can start running options, start running covered calls on AMC, and then I look at GameStop, and at the time it was like 220, 230. I'm like, yeah, that's a little rich for my blood. At that point we're talking over $22,000 to start one covered call rotation. So that's why I went with AMC. Nothing against GameStop. It's just I took AMC for the lower price and the greater flexibility in doing options. And it's worked out pretty good for me so far. Oh. Nope, not moving there. So let's kind of have a look here. And it's funny, while all this is going on with AMC on the daily, my P&L's looking great right now. It is. I'm flipping through. Let's see. Okay, I've got 1, 4, 5, 6, 7. I've got 8 stocks. Right about 8 stocks. 25% of my portfolio is red right now. So I'm 75% green. And we'll look at AMC. AMC is actually outperforming the rest of my portfolio too. AMC is up 4.55%. Right about 4.6%. My portfolio in general is up just shy of 4%. But it's nice to see so much, AMC and PROG doing their jobs, but it's nice to see the rest of my portfolio, pulling their weight and not just, not dragging down potential profits. Does hodl mean hold? So the question is, how much are we going to convert a Feisty over into full-blooded ape? Yeah, AMC up 5% on the day. Everything's looking good. And my positions that are red are just barely red. They're not really, we're talking less than 2% on most of them, just at a glance. Let's see, just because AMC has a lower price does not mean it's a better play. Not going to split hairs over this, but AMC crowd versus... Now, the GME crowd, they are the granddaddies. The GME crowd are the ones who are responsible for all of this. They are the ones who started this. GameStop is a great stock, but it goes down to an individual's trading style. And see, that is a huge difference, because $1,000 of AMC and $1,000 of GameStop are $1,000. It is the exact same value. Fractional shares have made it to where no stock is better than any stock in regards to dollar for dollar. Matching dollars, $1,000, $1,000. If they both move up 5%, you have the exact same amount of money. So there's no, this stock is better than that one. What it does come down to is for individual trading style, because I like to trade I like covered calls. For that simple reason, AMC is a better fit for my trading style. Each person has their own trading style, their own risk, their own risk tolerances, their own expectations of reward. For my trading style of how I like to play options, AMC is a better fit for me. But yeah, GameStop is a great stock. That's the whole, the fact that it is still here after everything it's went through, the run it had, GameStop is a great stock. And there's absolutely nothing wrong with it. If I could afford to have as many shares of GameStop as I do as AMC and run GameStop as aggressively as I run AMC, I would do it in a heartbeat. There's absolutely nothing wrong with that stock, and I would love to. It's just looking at a cost basis of, maybe I might, depending upon how long it goes, start part of, get to a certain point on AMC, get to a certain part on Ford, and use them as a feeder stock to start picking up GameStop. And start do the same thing with Ford to AMC, but do it with Ford and AMC together to get GameStop. I could do the exact same thing. And in the long run, if they drag this out long enough, I will end up doing something like that. Because if they leave it ripe for the picking, I'm going to go for my share. Or I'm going for my portion. Shouldn't say share. I'm going to want 100 shares of it easily. Yes, Feisty, eventually we will convert you to ape status. You're already on your way to one of us. You're with the Bro family. You're here in the Viper Pit. You're well on your way to becoming an ape. And see, Feisty, it doesn't matter if you've got one share of if you go out right now, take $20 and buy $20 of AMC. And you say, these are my shares of AMC, and this is my AMC, and I am not going to give it up until the hedge funds cover. And hedge funds cover, there are mathematical formulas out there for AMC to 100,000, 500,000 a share. Yeah, it makes for great clickbait, it makes for great headlines. We don't know how high it's going to go, but if that is your AMC, and you say, I am not giving this up until they cover, until they are exposed and they are forced to pay for what they've done, you're an ape at that point. It doesn't matter whether you have one share, 100 shares, 1,000 shares. Doesn't matter how many you have. If you understand what's going on and you say, this is not right, it needs to change, and I'm not giving up until it's resolved, then you're an ape. At that point, you're one of us. Doesn't matter, fractional shares. It doesn't matter if you own zero point 0.1 of a share of AMC. If you're not going to give that up until they cover, you're still an ape. Ape does not depend on how many shares you have. Feisty, check out the Super Stock sub on Reddit when you have time. Great due diligence there. Not financial advice, obviously. What is your floor on AMC? What do you mean floor on AMC? Sidious, are you referring to my target price on AMC? Where I think it'll run to? There are people in this chat who have probably heard me say it so many times that they could actually answer that question for me on how high I think AMC will get to. My target price for AMC is $1,748.81. That is the target price I'm planning AMC to run to. If it blows through that and it runs to 10,000 a share, 100,000 a share, and they prove me wrong, then I'm perfectly fine with that. Realistic numbers, though, Assidious, I figure AMC during the MOAS will hit somewhere between $1,250 to $1,750. I'm going to give it a $500 window, just because we don't know. They're going to be the people, the laughing boys who get out at 420. You know that's going to happen. They're going to be people like that. Now, if they hold to 1420, $1,420, then that falls right in that that 1250 to 1750 range. That is it is a very detailed number, Sidious. That is, and you can go back, Sidious, and go through my live streams. That number has never changed. Every time I have given a target price for AMC, it is that number. That does not change. It's actually written down. It's in my my work vehicle, but I have that price written down. That is my target price for AMC. Be a lot of rich. Yep. Yeah, we hit just shy of 1750. There will be a lot of rich people. That price easily will pay off everything. Me and my family. My family. Any debt that anyone has, pay off all the vehicles. Wipe the slate clean, and also have enough money to put into high yield dividend stocks, to where I never have to work another day in my life, and I'm paying myself thousands of dollars a month to do nothing, just in dividends. No, that is not my birthday outdoor smile. If you look it up, in fact, I will look it up. So everybody was always talking. How high? Now the 81, that is the year I was born. So yeah, the 81 cents at the end. Probably be only a 2 day. Shredder, I'm actually thinking with all the stop losses, potentially a 3 day run. I'm looking at the MOAS to take 2 to 3 days right about. I work and watch a few other YouTubers, so forgive me if I don't know a lot about what you say here and there. How I see it, whatever AMC price lands on GME will... Yeah, GameStop definitely has the potential to 10x. Looking at just where they sit now and where they are moving in unison with each other. And yeah, that is actually, Sidious, that is a really good estimation to make, that wherever AMC hits, GameStop will most likely be 10x on that. That is definitely an accurate thesis based on the numbers we've been seeing. So people were always asking, how high do you think AMC will run? Now me, I am a history buff. I am also a smarty pants. So if you look it up, and if you Google it if you look up who invented running, it will tell you Thomas Running invented running in 1748 when he tried to walk twice at the same time. So $1,748. The year that running was invented. How high do you think AMC will run? And 81 cents, just because I felt like being cheeky and throwing my birth year on the end. So that is where that price came from, and that's just me being a clown, me having a good time. Because in addition to teaching people, about options and trading strategies back and forth with people, we're here to have a good time. That's, on the red days and the green days, come in here, have a good time. If it's a red day, we'll do everything we can to have a good time and cheer up. And if it's on a green day like today, man, look at your P&L and just love it. So yeah, it wasn't my birthday, but you were correct. It was in regards to a date. So how many synthetics do you think are floating out there for AMC? You guys have 500 million float. Yet what is circulating? A lot of the circulation we're seeing right now is just mainly due to small to mid-size hedge funds that are probably, they don't care one way or the other. They're day trading, individual brokers day trading. A lot of the movement we're seeing is just day traders and swing traders. As far as synthetics, there are a lot of different, and we've just got a few minutes left here. I think that if there are synthetics, that the creation... Hey, Simon, welcome, man. Welcome to the live stream. If there are synthetics, they could have possibly been created by one hedge fund taking out shares on loan, loaning those out to someone else, and never reporting it to the original lender that they lent those shares back out, to where the same shares have been counted multiple times. So in order for Group B to exit their position, they buy the shares and give their loaners back to Group A, and Group A still has to buy the shares that they borrow, because they keep lending out the same group of shares. So I think that might be an avenue for generating more synthetics. But I don't think with that count, it'd be very limited, and they'd have to be careful about one group or another reporting them. So yeah, it really does come down to how many synthetics you think are floating around. I don't think there are billions upon billions of synthetics out there, because that much of a paper trail. Somebody could end up borrowing the shares that they already borrowed after lending them to someone that had already borrowed from them earlier. So it's a round robin. It creates an infinity loop. But somebody eventually would catch on. GME is showing 65 million float. Community thesis. So-called glitches have been out there. Hypothesis 1.6 billion floating out there. But Gary Gensler too busy staring at a wall. Yeah, that definitely comes down to it. That could be part of it, Assidious. We are actually at that time now. I have to punch out, or I have to exit my lunch and go back to my 8 to 5. It was absolutely wonderful having everybody in here. Super good content, super good questions. A lot of people. We covered a lot of ground today. I want to thank everyone who came in here. Pika, Shredder, Outdoor Smile, Riptide. I think I saw DD214 was in here. We had Paul. Paul always in here. Always great to have you. Assidious, thank you for stopping in. Feisty, Simon, here at the end, but it's still great to see you, man. Thank you for popping in here. Maybe one of these times you can catch a live music performance. Thank you, everyone, for coming in here, spending a little bit of time in your midday. And I will see everyone over on Clay Bros, and I wish you good health and good trades.